Yo, alright, what's good everyone? Hope you're all doing well. So welcome back to another video, another episode. In this video, I'll be breaking down the trade that you just saw me executing here on Nasdaq on the 30-minute power of trade. And in this 30-minute power of trade, like in that execution of it, I actually just started recording after I took the trade, so my bad for that. And the trade was so quick that the execution video is so short. But yeah, that's good because the take profit was hit so quickly with almost zero drawdown. So that's very nice, but makes the but at the same time it makes the execution video very short. But no worries. So the analysis that I had for these 30-minute power of tree here on Friday 31 July 31 was very simple. So the main elements, the key elements are on the screen already. So we have here the two most important true opens for me for this specific scenario. And I have one key level marked here on this level price, almost 28,700. This is an important level. There's a key level there for me. So basically, I was, looking back at the opening, at the true day opening. So I mainly like to see what happened here. So if price is consolidating and forming like some failure swings like it did form on the lows, this is a great scenario for me, right? Because the third part of trade is a model that I want to trade reversals. So the first thing that I start looking after the true day open is if price have failure swings, if it has like an accumulation, like this low resistance liquidity for one side of the range, right? So if I look to the upside here before the 6 a.m., so I like to make this division, right? We have 6 a.m. and we have before 6 a.m. to midnight, and then after 6 a.m. to 9:30, right? So looking back here at this range, we can see that we had liquidity here, and we had this low, those lows there. Those are low resistance liquidity, so that are a very nice target. But then I look to the upside and I see that I have this high and this high. So this is swings, failure swings, right? So this is low resistance as well. And I have a key level just above this liquidity. So this is nice because this is a perfect scenario for price to go to one side of the range and then drop to the other side of the range. So when I'm doing 30-minute power of tree, almost every time, this is what I'm looking for, right? This is what I'm looking for. And I was bearish here. So let's do kind of a high time frame one. So I was bearish here because price was like, it was needed to make a little retracement, at least some kind of retracement. Because look, this is from a new analysis. So look, this it was low of week, right? So price formed this low of week and it didn't form a good low of week. So basically, in my opinion, this was overextended. Right? We still had some targets here, but for me, the main target was the new week opening gap right here. So then price expanded and then reached the target. And then this day, specifically Friday, that I took the trade, the profile was agreeing of price forming a reversal there. Right? So see how there is no manipulation below the daily open. There's no key level being tagged below the opening. So price immediately opens up on the day. So this shows me a sign of overextension. Like price is already overextended because of this range, because of the weekly low. So this is the weekly power of tree in alignment with the daily power of tree here. So I use the 6-hour to see its profile. So looking at this profile specifically, you can see that price opens high immediately. And it opens high into that new week opening gap, into those key levels, right? So I was expecting at least a retracement take place on the New York AM session. So that's why I used the 30-minute power of tree here to try to frame the high for the New York AM opening. Damn. So basically that's it, right? And then if you look right there at the market open, so let's go to a lower time frame, like 2 minutes. You will see that the true micro session open, which is this one, the micro open, true micro open, price opens up, immediately shoots higher without manipulating below. So like the true day open, there's no manipulation below the low here. And the true micro session open, there's no manipulation on the lows. Both open high first with the daily profile as well, and reaches the target, the drawn liquidity. There was this high and reaches the key level here that we have. This line is my key level for that day. So it reaches that key level. Then now it's nice to try to frame a reversal from that high. Okay, and another important thing in this type of scenarios, it's nice to have sequential SMT. So SMT is here will make this whole sequence higher probability. So let's compare two assets here. So by using the quarterly Ethereum indicator down here, I can tell you for sure that definitely we have, I guess it was either a 6-hour one or a 90-minute one. So let me see. With a yes, I guess. Yeah, so right here you can see that yes didn't form a higher high. So this is the 6-hour one. So look, Q2 high right there on yes haven't been mitigated. Like price didn't swap out this high, but here on Q it did. So this is sequential SMT, right? So what we're seeing here is sequential SMT. At the same time, that price is reaching for that key level. So we have price overextended higher, opening higher on the day, opening higher on the session, hitting the key level, then forming cracking correlations. So that's exactly what I want to see to take a trade, to take a short position there. So that's when I go to the 15-second chart. And some people say like, what, you're trading the 15-second chart? This should be gamble. Like, no, if price forms this immediately expansion higher, hitting the key level at the beginning of the 30-minute candle, it's okay for me to use the 15-second. I can't use the 15-second if we are already late on that 30-minute candle. But at the beginning of it, it's okay. So the 30-minute candle opens at 9:30, right? So see, this IST here occurs in like 6 minutes. So it's okay to use the 15-second. If it is later on this time window, then I will not use the 15-second anymore. But since it is at the beginning, it's okay. So see, price immediately shoots higher, lead failure swings, leave these lows, these accumulation lows right here. So all of this is like an accumulation, right? So yeah, so basically I take a trade here on this 15-second side stick. So see, price reaches for the key level, then reaches for the SSMT, forms the sequential SMT, the high of the 6-hour candle at the same time there. And here we have the side stick, the chain state of equilibrium, the 15 seconds. So the execution here is the easiest one, is the most simple one. Right here, when price broke below this right here, I place a trade. Then my stop loss, I like to keep it at the highest body, at the highest close. So it was something around here. But in that specific scenario, I left my stop loss at this high, at this little sweep here. And why I did that? Because like if price was going to go all the way up there to take out my stop loss here on this sweep, definitely it will go to this high as well. So that's why I prefer to keep my stop loss around here, you know. And then I aimed like, I don't remember exactly, I guess it was around here or something, like 4R, 4RR or something like this. But it doesn't matter because we had a lot of targets, and I'll tell you exactly what are those targets. So the target that I should have used, that was like the most correct one, that was the most the perfect one, was the low here. So this low, not this low, the accumulation low, this one, right before 9:30. So we look at this price action, we see that around here or so price was expanding, and then it started consolidating before expanding again. So this is a nice strong liquidity on that low. So this should have been the target that I used, but I'm sure that I didn't. Like I used something around here, but okay, it's valid. So this trade, bro, literally almost zero down, and then it went 150 points right away, like immediately in some couple minutes, So basically that's it. And see how much price fall, how much price dumped after this because of this sequence. You see, and it makes plenty of sense. It makes a lot of sense for price to go higher than drop using all of those confluences and that confirmation. So that's it, guys. That's the trade recap. Yeah, it would be very nice, guys, if you enter in my Discord server. So I'll leave the link in the description. You have my contacts there as well. So you can add me on Discord, send me messages, and so on and so forth if you have any questions. Or you can just leave in the comments as well. And yeah, guys, so that's it. I'll see you all in the next video, and bye bye.